Dear friends, today we are going to talk about the concepts that are associated with valuation. What exactly do you mean by valuation that we are going to understand or discuss today? In other words, what exactly is the concept of valuation that we are going to study today? Now, what exactly is valuation? It is a process of, the process of determining the present value. The more important word here is present value of a company or an asset. Predominantly, we'll be talking about asset, company's valuation, or firm's organizational valuation we'll talk about later. But for now, we are talking about valuation refers to the process of determining the present value, the current value, the current value, or in ongoing value of an asset. Now, valuation can be done by a lot of techniques that we'll discuss later on. Now, why valuation? Analysts want to place value on a company from the management perspective. If you see very closely, this we are talking about from the management perspective. For what? For prospective future earnings. Also to determine the market value of company's assets and its capital structure composition. Valuation is for the simple reason that we want to estimate the prospective future earnings and also to determine its market value of the company's assets. Now, what is market value? Market value is the value of any given asset on a particular day on stock exchange. Now, why we are talking about that? We are talking about this simply means the company's assets means the price of shares, debentures, or bonds. This is the market value, right? And its capital structure composition. Now, valuation gives you a brief understanding about the capital structure composition. Remember this diagram, whether the capital structure is equally divided between shares, debentures, bonds, and loans, or what is the composition exactly? Is it more of shares, debentures, bonds, and loans? Right? This composition is determined by valuation. Now, if you see closely this visual that we are seeing right now, this will give you a brief understanding about why valuation, or for that matter, why all these things. This is predominantly, if you see, to look at the results, to look at the competencies, look at strategies, consultancy to provide solutions, to see value, all these things, There are a lot of things that we are talking about here in this diagram. Financial management, why valuation? Financial management to study results, to develop strategies, right? To see the competencies of management, to verify the results, to provide business solutions, all these things we're talking about. Also, we're talking about valuation so that we can go into financial advisory, whether to buy more shares or not. Exactly, all these things they are taken care of. Valuation, it is also used in securities fair value. Here we are talking about, when you say shares, a security, we say that shares, debentures, bonds and loans. Fair value, it's face value, right? Or in other words, you can call it as par value. What's face value and what's par value? Face value is, say for example, a 100 rupee share is being traded on stock exchange for say 950 rupees. So 100 rupees becomes the face value. Par value, face value is talked in terms of shares. Par value is talked in terms of debentures. Now, why? Valuation is also used in determining the securities or assets face value, which depends on the amount that a buyer is ready to pay. If you know the face value or the par value, how you're going to know? You're going to know by valuation. This helps you in setting a benchmark. Valuation helps you in setting a benchmark where a buyer is ready to pay, right, for the security, for the asset, financial asset, right? For what? For the financial asset in the form of shares, debentures, bonds or loans, right? Now, how this is going to happen, how this is taken care of, this is studied here. If you see very closely, everything is clear over here. What does it say? It says that during the trade of a security on an exchange, sellers and buyers will dictate the market value of bonds in short. However, if you see here, they're talking about intrinsic value. They're talking about intrinsic value. Intrinsic value is a concept that refers to a security's perceived, more important, perceived value on the basis of future earnings or other attributes. Now, if you see closely, with respect to valuation, what is the fundamental concept that we are studying? We are talking about valuation in terms of future value. That is the only reason why we are talking about. And this understanding of future value, right, is the basis of financial management. Now, to determine the future value of a given asset, valuation is done. Now, this valuation is based on, with respect to these shares, debentures, bonds and loans, this valuation is based on perceived value, right? Now, this perceived value is also termed in financial matters, is termed as intrinsic value, right? Intrinsic value. inherent value of an asset by itself, right? Now, what does that valuation of an asset by itself means? The projected earnings of an asset is what we call it as perceived value or intrinsic value. Based on this valuation, we are going to know whether the asset of a company is undervalued or overvalued, right? There's a difference between the market price and the perceived value or the intrinsic value. It can be performed on assets like bonds, debentures, loans, or shares. Now, why valuation is required? For a number of reasons. That if you want to merge your company or acquire another company or do capital budgeting or do investment analysis, litigation, any kind of dispute, or financial reporting, for these reasons, valuation is more important, right? Now, put it simply, if we want to talk about valuation in very simple terms, valuation or value. If you remember, in the last lecture we had talked about worth when quantified becomes value, and the method of determining this valuation is what? Is the method of determining value is what we call it as valuation. Now, what are the reasons for that? The reasons are mentioned below, like for example, litigation, exit strategy, when you want to buy a business or acquire a business, when you want to sell a business, when you want to do strategic planning, when you want to go for raise funds, you want to sell shares, all these, right? All these things, they do help the business in determining the valuation. Why valuation we are talking about is simply because it's critical. It's critical that needs to be done by a valuation expert. Now, a lot of times, many a times, students, they ask, what do they ask? What are the jobs in finance? Now, you got a job in finance as what? As valuation expert. This job is crucial and critical. Of course, to do this, you need to have skill sets. Now, what are the skill sets that are required for doing jobs in finance is you got to have a sense of numbers, and you need to have logic which is sound. Nothing happens in finance on its own. Whatever data that you have with respect to finance, It is not randomized, right? The financial data, if you see the financial data, it makes sense, it makes sense. This financial data does not pop up, right? It does not pop up on its own. It does not pop up on its own. There is a reason, there's a logic for that, why it's happening. For example, if we want to talk in simple terms, sales figures, they are not random, they are a result of production, marketing, distribution, demand, all these things. There's a combination of these factors, and these combination of these factors, they don't pop up, they don't pop up. The figures, they don't pop up on their own. There's a logic behind that. So then you talk about sales. Then you talk about the figures. And to understand these figures, the sales figures, you need to have sense of numbers and you need to have logic. And these are the skill sets that are required for jobs in finance. And here, in terms of valuation, in business valuation, this cannot be done, this financial analysis cannot be done by a layman. It needs a valuation expert. There you can have a job. Now, how to do valuation? There are a lot of organizations that offer courses for making valuations. Now, put it simply, these valuations form a central basis, they form a central basis of proper decision making for organizations both in the present and future. Of course, it's not very easy to predict future, but for business to survive, they need to prepare for uncertainty. What's financial management? Financial management is preparation for uncertainty. Uncertainty, we are talking in terms of future values of assets that are going to give you what? That are going to produce cash flows, right? Here, if you're talking about assets, this we are talking about land, labor, capital, right? Plant and machinery. These are what? These are assets that are going to give you steady stream of cash flows. Now, what is the worth of these cash flows? You need what? You need to study valuation. That is a simple reason why we are talking about today for valuation. And for what is required, valuation is required for this thing, for proper decision making. Everything rests in finance on timely and proper decision, because in finance we are mostly talking with respect to future, and future being uncertain, you need to value what you are going to receive now against what you'll be receiving in future. This is the simple premise on which the whole concept of valuation rests. That's all for now. Thank you.